Hi Tribe, welcome back to my channel. Kinna Mapalomaku, a personal finance columnist and published author of this book right here. Okay, so for today's video, Tribe, I want to talk about tax-free savings accounts, and I will keep on doing this video about tax-free savings accounts until at least 90% of my tribe has a tax-free savings account. All right, so for today I want to talk about what is a tax-free savings account, the benefits of a tax-free savings account, how not to use a tax-free savings account. I think for me this is the biggest missing link in the conversation around a tax-free savings account. All right, so first of all, what is a tax-free savings account? So a tax-free savings account was a way that the government is said we want to encourage more and more people to start saving, because we know that our savings rate or investment rate is very, very, very dire. But I mean, the government themselves don't really save that much. We know that. Most governments don't save that much. But anyway, we are talking about personal finance. We're not talking about macroeconomics here. The fact that you can invest in a tax-free savings account, the benefits are that once you have invested into a tax-free savings account, if you decide to cash in your investment and take your investment, SARS will not want a cent of that money. So there is no capital gains tax, no CGT on your money. There is no dividends tax. There is no interest that you pay on that money. All right. So for me, that is the biggest advantage. And that is why it's called tax-free, because they don't charge any tax. Whenever does SARS ever do that? Never. Okay. So that is the biggest benefit. But what are some of the mechanisms or the workings of a tax-free savings account? A tax-free savings account, you can contribute a maximum of 3,000 Rand per month into a tax-free savings account, which equals to 36,000 per year. All right. So even if you do not have the 36,000 Rand per year or 3,000 Rand per month, you can still contribute a minimum amount of 250 Rand, but with most asset management companies, I know they require a 500 Rand debit order. Then with a tax-free savings account, you can contribute the maximum lifetime limit of 500,000. And what do I mean by maximum lifetime limit? I'm saying that they require you, or you have a limit of 500,000. So money that you can put into this investment is a maximum of 500,000 Rand as an individual. And probably you're thinking 500,000, oh, that's a lot of money. But if you break it down, you say 500,000 divided by 36,000 Rand per year, it means that you will reach this limit of 500,000 in just almost 14 years. All right. And I know some of you are like, oh, 14 years, such a long time. Guys, time moves by so quickly. I was 20, then I blinked, I was 30. Next thing you know, we'll be 40, 50, 60, 70. All right. So make sure that you start as early as possible with any investment, but specifically with a tax-free savings investment. The earlier you start, the better it is for you. Do not be paralyzed by all this investment terms. Just go for it. All right. So how not to use a tax-free savings account? And for me, this is a very important one. How not to use a tax-free savings account? Please do not take a tax-free savings investment or account as a short-term investment. I often hear so many of you tell me, oh, I have it with my bank. Then it means that it's very easily accessible, and it means that it's earning simple interest. And a lot of the times when it's in your bank, people think that it's a transactional account that they can use whenever they are a little bit short of money. Someone actually DM'd me in this past couple of days and told me that, okay, Mapalo, I have a tax-free savings account with my bank, and that's money I use for my emergencies, for small and emergencies. That is definitely how not to use a tax-free savings account. It is not an emergency fund. It is not money that you use at the end of the year to go have fun with your friends. It is not a short-term thing. Please get that. If you get that, trust me, you have exactly what the benefits or how to use a tax-free savings account, all right? Think about it as a long-term investment. And I've made an example. Remember, I love numbers because numbers make sense, okay? So I've done an example here and I've said, all right, if you were to invest 3,000 Rand per month for 15 years, and let's be cautious and use a 9% interest rate, but remember it's compounded, all right? So 3,000 per month, and you invested for 15 years, and it gives you an interest rate of 9% compounded over that 15-year period. You will end up with over R1 million, all right? So remember, the very same period, for 14 years, you've contributed 500,000. So what you have contributed, what you have taken out and put into your investment would be 500,000. But because of compound interest and because you've left your money to be invested for a long period of time, then you end up with way more than what you have invested, all right? And that is the beauty of compound interest. So if you keep on putting your money into a bank account where you're earning simple interest and probably it's in a money market, you will never ever reach this ever, okay? So the whole point is that you have your tax-free savings account with an asset management company, and I'm going to mention a few. Not that these are the best, not that these have the highest interest that you can earn, but these are ones that are just at the top of my head. First of all, don't invest it with your bank. Don't put it with a life insurance company. Put it with an asset management company. And that being said, a platform like Easy Equities, that could be one, especially if you have less than 500 Rand per month to contribute. Then there's etfSA, there is CoreShares, there's Investec, there is Prudential, there is Coronation, there's Allen Gray. There's lots of asset managers out there that you can put your tax-free savings investment with, and remember, for the long term. So some of you probably are thinking, okay, now Mapalo, I have my tax-free savings account with my bank. What do? Do I cash it out, then go start with an asset manager? Nope, you do not do that, all right? So remember, any withdrawal, if you take your money out, it is seen as a withdrawal. And if, let's say, for example, you have contributed 20,000 and you take it out, they're not going to say, oh, okay, you took out that money, you can still contribute 36,000 because no. They look at it as if, okay, you've used up your 20,000, now you're only left with 16,000. So make sure that if you want to transfer from your bank or from a life insurance company to an asset management company, that you fill out the right form and it is just a transfer, so it will not be seen as a withdrawal. All right, tribe? So really, I hope that through this video, through watching the entire video, that you have learned that a tax-free savings account is a long-term investment, not a short-term one. It's not your emergency fund. It's not money that you just have somewhere here. For example, I'll give you an example. I use my tax-free savings investment as an alternative, or as what is the word I'm looking for? Or as a supplement, yes, as a supplement to my retirement. So I'm thinking that I do not need this money in the interim. I do not need it in the 5 years. And the sole goal of me putting my money into a tax-free savings investment is that when I retire, or one day when I slow down, I want to have money that I can take from SARS and say, this is fully my money, and SARS is not going to want anything about this money. They're not going to charge me interest. They're not going to charge me CGT. They're not going to charge me dividends on this money. So for me, I supplement my retirement with it. So I know for sure I will not be touching that money for way more than 15 years, all right? Then another example is that I have a tax-free savings account for my son in his own name. And this money is kind of earmarked for his varsity, or if we don't need it for that, it could be for anything else we would want to use that money for at that time. But remember, the magic is in the compounding. All right, informative tribe. I hope that you finally get how not to use a tax-free savings account and how to use it, but also the massive benefits of having a tax-free savings account. Remember to subscribe if you like most of the videos that I do, and remember to click on the notification bell so you do not miss all the upcoming videos. All right, so thank you so much for watching, and I will see you soon. Bye now.